So it is regarding the bill of exchange. It is regarding the bill of exchange. As I already told you that we are having journals, we are having ledgers, and further from the ledger itself, we basically go for trial balance, and further in the case of the trial balance, we check the arithmetic accuracy, and after that we basically go for the preparation of the final statements. The main journal itself is divided into the number of journals. So you have a main journal and itself further is divided into subdivided into journals. This basically also includes bill receivables journal and bills payable journal. Now what is bills payable? Now see that if you have made a sale to person A, and person A has not paid you the amount yet. So you sold a goods amounting rupees 10,000 to person A, but person A has not paid you yet. In that case particularly, you'll be doing what? You'll be basically drawing a bill. And further that bill is to be accepted by the buyer itself. So you are seller, A is a buyer, and he has not paid the payment yet. It may be the case that he will be paying the bill on the presentation of the bill, or it may be the case that he is to pay after a particular period. It may be the usage bill. So we will be looking into the different scenarios what would be there. So it could be regarding bills receivable journal or bills payable journal. When the bill is drawn and is accepted by the buyer itself, then the entry is to be entered or to be recorded in the bills receivable journal. And further, when you are to pay, so in the books of the buyer, he has accepted the bill and he is obligated to pay the amount, so it would be recorded in bills payable journal. Are you getting my point? Okay, further there are different type of negotiable instruments. So bill of exchange, promissory note, checks, all these have been defined in the Negotiable Instrument Act 1881. Okay, so these have been defined under Negotiable Instrument Act, and further these are said to be the instruments for credit. You know, when we are doing business, it's not always the case that you'll be doing the sale in cash. You also have to take the credit, you also have to give the credit. Okay, so the most commonly used instruments for credit are bills of exchange and promissory notes. So the instruments that are used for credit are basically bills of exchange and promissory note. These have been defined under Negotiable Instrument Act. First of all, we will be learning regarding the bill of exchange. So it is defined under section 5 of the Negotiable Instrument Act. Promissory note are defined under section 4 and checks are defined under section 6. Okay, so further first of all, we are going to learn regarding the bill of exchange. So bill of exchange is basically an unconditional order. It is what? It is basically an unconditional order which is given by the seller to buyer. Or we can say it is basically an instrument which is drawn by the creditor who has given the credit, that would be the drawer of the bill of exchange. As I told you in the earlier example also, that XYZ has sold goods to person A and A has not paid yet. So in that case particularly, an unconditional order would be given by the seller itself. Now seller would be giving the order itself over here. So it is basically seller would be giving an order, and for the seller would be the creditor who has given the goods on credit, and further he is also said to be drawer because he will be drawing the bill of exchange particularly. So over here, seller is the creditor and seller is the drawer who will be drawing the bill, and further we can also say he or she has to be the maker of the bill of exchange or the maker of the bill of exchange. Now this bill has been drawn, and further it is further given to person A who is a debtor. Basically to him the goods have been sold on credit, so he or she would be the debtor in this particular case. And further this bill which is sent by XYZ to person A, it is an unconditional to person A so as to pay the amount either on presentation of the bill, that would be the side bill, or it may be the case that the bill is to be paid after a fixed duration. Okay, in that case it would be a usance bill. Okay, so bill would be given to person A, and further it is to be accepted. It is to be accepted only then this bill would be valid, otherwise it will not be valid. Okay, so when a bill is drawn by the drawer or by the creditor, it is further presented to the seller, to the buyer or to the debtor for accepting that particular bill. Then further this bill is accepted and further given back to the seller itself, Now seller is holding this particular bill. So in this case particularly there is a consideration because he has sold the goods, so that would be the consideration regarding the bill, and further he is the holder of the bill, so in that case he has a possession of the bill, so he would be holder in due course. So they will be using two terms. First of all, it is a holder, and second, it is a holder in due course. I'll be explaining both these terms, holder in due course. Okay, I'll be explaining both these terms later on, but right now you need to understand first of all that there are how many parties in the case of bill of exchange? There are three parties in case of bill of exchange. One, it is the drawer who has drawn the bill. Second, it is a acceptor, or it is basically drawee on whom the bill is drawn. So over here, person A is also drawee. On whom the bill is drawn, and further drawee is also acceptor in this case. And further this bill is to be forwarded to the person who is entitled to receive the payment. It may be the same person as drawer itself, or it may also be a third party. So person XYZ over here may also order person A. There may be an unconditional order by XYZ to A so as to pay a certain sum of amount on some particular date, or on presentation of the bill, or after some particular duration to person C also. Person C over here is a third party and he is paying. So over here, A is having the liability to pay that particular amount as per the conditions mentioned on the bill of exchange itself. So what are the main points? First of all, bill of exchange is a negotiable instrument which is defined under section 5 of Negotiable Instrument Act, and further there are three parties in case of bill of exchange. One, it is a drawer who is the creditor, and further it is drawn on the drawee, that is the debtor over there. It is an unconditional order, and further the order is given so as to pay a fixed amount on a particular date, or maybe after some particular period, or maybe on the presentation of the bill. If the amount is to be paid on the presentation of bill, that is on demand, then it is said to be the demand bill. Okay, so there are two types of bills. One, it is a demand bill, and the other one, it is a usance bill of exchange. So there are two types of bills which can be drawn. It could be a demand bill. In case of demand bill, whenever the bill is presented to the drawee, he is obligated to pay the amount then only. In that case, that is said to be the demand bill. What is the other bill name? It is a usance bill. In case of usance bill, a particular credit period is given. It could be regarding, it may be said that XYZ ordered the person A so as to pay the amount after 2 months. From the date mentioned on the bill of exchange itself. Okay, so in that case, it would be what? It would be usance bill. In which particular period of credit is given, or it could be the case that a particular date is mentioned on the bill itself. That it may be the case that a particular date is mentioned on the bill of exchange itself, that you are to pay the amount on 16th of June. You are basically obligated to pay the amount on 16th of June. It may be also the case that a particular date is mentioned on the bill of exchange itself. Okay. So that is regarding the basics of the bill of exchange. So there are three parties, as I told you: drawer, a person who draws the bill; drawee, a person on whom the bill is drawn; and further a payee, that a person who is going to receive the money. Second instrument that we are going to learn about is basically the promissory notes. Promissory note, as the name suggests, it's a promise. So basically, it's an unconditional promise by the drawer of the promissory notes, of the maker of the promissory note. Let us assume the same case, that XYZ has sold the goods to person A over here, or let us take a different case, that XYZ has given a demand loan to person A over here. Who is maintaining a fixed deposit account with bank XYZ. And XYZ has facilitated person A with a demand loan. Okay, now in that particular case, A would be doing what? A would be doing an unconditional promise to XYZ. A would be making an unconditional promise to XYZ. So in this particular case, who would be the drawer? The debtor would be the drawer. So if a loan has been advanced by XYZ to A, in that particular case, XYZ would be the creditor and A is the debtor. A is the debtor. Now in that particular case, XYZ is basically the creditor, A is the debtor. In the case of promissory note, who is making the promise to pay the amount? Debtor would be making an unconditional promise to the creditor that he is having the obligation so as to pay a particular amount on some particular period, on some particular date, or on the presentation, or on the demand itself. Okay, so that would be basically the promissory note. So in that case, it is A is the maker, that is a debtor is a maker, and further it is drawn on XYZ. It is drawn on XYZ. So there are two parties in case of promissory note, and it is need not to be accepted. It is need not to be accepted because it is an unconditional promise by the debtor himself. So it is not need to be accepted. Okay. So a written undertaking by the buyer to make a payment on a specified date can take the form of a bill of exchange or a promissory note. A promissory note is written by the debtor. As I told you, it is written by the debtor, promising the creditor that he is basically having the obligation to pay a specified sum after a specified period. Okay, so that is what? That is a promissory note. There are two parties in case of promissory note. One, it is a maker who basically makes the note and promises to pay the amount, and for the second party, it is a payee to whom the amount is to be paid, that who will be receiving the payment itself. Now let us look at the differences between the bill of exchange and promissory note first of all. So bill of exchange is what? Bill of exchange is an unconditional order. So it is basically given by the drawer, that is a seller of the goods would be giving an unconditional order, or the creditor would be giving the unconditional order. But in case of promissory note, it is an unconditional promise. Who would be doing an unconditional promise so as to pay the amount? The buyer would be doing an unconditional promise, or we can say the debtor would be doing an unconditional promise to pay. So it is basically drawn by the creditor. Bill of exchange is drawn by the creditor, whereas promissory note is basically drawn by the debtor. It is basically drawn by the debtor. And further, in case of bill of exchange, acceptance is required. Acceptance from debtor, acceptance by debtor is necessary, it is mandatory. But in case of promissory note, no acceptance is required. We have already learned the reason why it is not required. And further, in case of bill of exchange, there are three parties. One, it is a drawer, drawee, and payee. In case of promissory note, there are two parties only, that is maker and payee. There are two parties only, maker and payee. And further, on dishonor of the bill of exchange, it is usually to be noted by the notary public. We will be learning regarding these particular terms also. So let us now concentrate on particular this reason, that in case of bill of exchange, if the bill is dishonored, when the bill is dishonored, when the payment was due and it was not made by the drawee. Okay, let us assume the same case, that XYZ drawn an unconditional order on person A that he is obligated to pay the amount after a particular period of 2 months, and when XYZ presented the bill to A, after the due date, the amount was not paid. Now the payment is defaulted. That is basically the bill is dishonored. It means what? Now the bill is dishonored. Now in that case, it is to be first of all, a legal notice is to be served to the defaulter over here. A legal notice would be served to the drawee over here, and further, after the dishonorment of the bill, after serving the legal notice, it is to be usually noted by the notary public, so that it can be taken as a proof. So as the fact of dishonor can be taken as a proof in the court of law. Okay. That is the case. And in case of promissory note, noting is not required. Noting is not required in case of promissory note. Okay. Then further, it is regarding the bills receivables. As I have already told you that what are bills receivables. So when you are to receive money, so when you are drawing the bill in the case of the bill of exchange, when you are drawing the bills in case of the bills of exchange, you are basically giving an order to some other person and he has accepted your order. and he has accepted your order. As we remember the same example, XYZ has given an order. In the case of he has drawn the bill, he's basically giving an unconditional order to person over A over here, that he is obliged to pay the payment. He is obliged to pay the payment, and further over here A has accepted that particular bill. A has accepted that particular bill. Now that particular entry is to be recorded in the bills receivable. That is to be recorded in the bills receivable journal. Okay, so bills receivable is what? It is an asset, because you are entitled to receive the payment. You have not received the payment yet. You will be receiving it after or on the due date, but you have not received the payment yet, but you are entitled to receive the payment, so it will go under bills receivables. So bills receivable is an asset. So bills receivable is an asset, and in the books of A, he has accepted to pay the payment. He has accepted to pay the payment, and over here he is having liability to pay the bills. He has accepted. He is a liability to pay the bills. He has accepted. So it would be a liability. So bills payable is a liability, whereas a bills receivables is an asset. Are you getting my point? Okay. Next, it is regarding the check. Now there is some important note over here. First of all, that says over here that for accounting purposes, no distinction is made between bill of exchange and promissory note. That no distinction is made between bill of exchange and promissory note for accounting purposes. Otherwise, if we see the legality, there are differences, but in case of promissory note, the legality is different, but for the accounting purposes we will be considering it as same. Okay, next it is regarding the check. That is section 6 of the Negotiable Instrument Act. That is regarding the section 6 of the Negotiable Instrument Act. So check is a bill of exchange. Check is what? Check is also a bill of exchange. There are three parties involved. First of all, let me tell you what is the scenario. That A, who is maintaining a saving fund or a current account with XYZ bank. Let us say he is maintaining XYZ current account or a saving fund account with XYZ over here, and he has a checkbook. So he draw a checkbook and further given it to person B over here. Now in this case particularly, A has drawn the instrument, so he is a drawer, and further it is always, a check is always drawn on bank. So in case of check, the drawer is a person who is maintaining an account, and further the drawee is always a bank. And further in this case particularly, B is the payee who will be receiving the money, who will be receiving the sum of money. So a check is what? A check is a bill of exchange drawn on a specified banker. It is always drawn on a specified banker, and it is payable on demand or on order. Okay, and further features. What are the features? A check must fulfill all the essential elements of the bill of exchange. A check must fulfill all the essential elements as that of the bill of exchange, and further it must be payable to bearer or to order, but in either case it must be payable on demand. So it is payable to bearer or it is payable to order, but it must be payable on demand. It means when it will be demanded from the bank, when the check will be presented, an amount is basically demanded. So it is always payable on demand, and further banker named pays it when it is presented for payment, as I told you, and signatures of the drawer must tally with the specimen signatures, which are maintained with the bank, and a check must be dated. If a check is incomplete, that all the necessary descriptions or all the necessary columns have not been filled in that case it would be an incoherent instrument. Or an incomplete instrument. Are you getting my point? So a check must be dated, a particular date must be mentioned on the check itself, and further it is having a particular validity, and further a check drawn with a future date is valid. That is said to be the post dated check. But the same is payable on or after such specified period. Let us consider that if it is today If it is today 14th of May and further a check dated 16th of June is drawn, in that case the check drawn is a valid check. The check drawn is a valid check which is having dated 16th of June, but it is to be presented, the money can be demanded on and after 16th June only, not before it, not before it. So these were some of the features regarding the checks. Okay, then it is regarding the differences between the bills of exchange and check. Let us have a look at it. First of all, a bill of exchange can be drawn upon person including a bank. So in case of bill of exchange, it is not necessary that the drawee is always a bank, but in case of check, the drawee would always be a bank. And further, a bill of exchange requires acceptance, whereas in case of check, acceptance is not required. Acceptance is not required because it is a well-known fact that bank is maintaining the deposits of the drawer itself. That is why he is basically drawing the instrument. Otherwise, it would be dishonored. So if A has drawn a check and further given it to person B, B presented the check to the bank itself, and A was not maintaining balance. In that case, it would be dishonored. In that case, the instrument would be dishonored. Okay. Then further, the acceptor of bill of exchange is allowed 3 days of grace after the date of maturity of the bill. Now what this point signifies? Let me explain it to you. That particular point. So let us say a bill of exchange. Over here is basically drawn by XYZ who has sold the goods to person A. So basically XYZ is the drawer in this particular case and A is the drawee on whom the bill has been drawn, and further XYZ has ordered so as to pay a particular sum of amount after 2 months. It is mentioned that after 2 months he is basically to pay the amount to person C. So C is payee over here. Now how the due date is calculated in case of bill of exchange? When the particular period is not mentioned, exact date is not mentioned on the bill of exchange. When a particular period or exact date is not mentioned on the bill of exchange, it is said to be demand bill of exchange. That whenever the bill would be presented to person A, he will be having the liability so as to pay the amount. And it may also be the case that a particular date is mentioned over there it may also be the case that a particular date is mentioned. It may be the case that the bill is drawn on 15th of May 2021 and further a particular date is mentioned that A is basically given an order to pay the amount on or after 16th of June 2021. In that case particularly, no grace period is to be given. So if a definite date is mentioned on the bill of exchange, in that case no grace period is to be given. But otherwise, if it is mentioned that person A is having the liability or person A is ordered over here so as to pay the amount after 2 months or after 1 month or after 20 days, in that particular case a grace period of 3 days is given. In that particular case, grace period of 3 days is given if a particular date is not mentioned on the bill of exchange. Okay, so if the bill was drawn on the 15th of May 2021 and further it was said that A was given an unconditional order so as to pay the amount after 2 months. Now in that case, what would be the due date? It would be 2 months from here on, that is May, June, July. So it would be 15th of July 2021 and further 3 days of grace are to be given. So it would be 18th of July 2021. Are you getting my point? Okay, so that it is all about. So in accounting and finance for banking, that must be more than sufficient to know about it. So that is why it is said that in case of bill of exchange, 3 days of grace after the date of maturity of the bill are to be given. Okay, now you know the scenario, in what particular scenario the grace period would be given. Okay, and further, a check is always payable on demand. Whether it is an order check, whether it is a bearer instrument, it is always payable on demand. Okay, and a bill of exchange must be stamped It is required that it must be stamped. So whatever stamp duty is over there mentioned as per the law, that must be paid. So it must be stamped. And further, in case of check, it does not require any kind of stamping. And notice of dishonor is necessary in case of bill of exchange. Notice of dishonor is necessary in case of bill of exchange, whereas in case of check, the notice of dishonor is not necessary. Notice of dishonor is not necessary. Okay, you can serve a legal notice regarding it that you are to pay the amount within 15 days, but a notice of dishonor is not mandatory in case of check. Okay. Then further, we have learned regarding the term and the due date of the bill. Then we will be covering the important terms regarding the bill of exchange. We will be covering important terms regarding the bill of exchange. So there is a term, first of all, that I told you that we will be learning, which is holder. So if a person who is legally entitled to receive the money on due date is said to be holder of the instrument. Now let me explain it to you with an example. Now let us assume an instrument has been drawn by XYZ, and further it has been ordered to person over here, so who has to pay amount after a particular period. After a particular period, let us say he's having a liability, and that particular bill is now accepted and further given to XYZ, and he is having the liability, so as to pay the amount after 2 months. Okay. Now this particular person, in this particular case, XYZ is a drawer, and also he is the pay, Now XYZ is to pay an amount to person C. XYZ is basically having a liability, so as to pay an amount to person C. So he basically endorsed the instrument. It may be also the case that he must have ordered to directly pay the amount to C, but on that particular instance, it was not to pay C, and later on basically the liability arose, and further he was to make the payment, so he endorsed the bill of exchange to person C. Now what do you mean by endorsement? Endorsement means now C would be entitled to receive the payment. Okay, now XYZ over here is a drawer, and further it's a pay. Now in that particular case, that when he have endorsed the instrument, now XYZ would be the endorser. And further he is endorsing the instrument to person C over here, so it would be endorsee, to whom the instrument has been endorsed. So it is basically negotiability of the bill of exchange. It is basically regarding the negotiability of the bill of exchange, that the bill of exchange is now delivered to person C. Now bill of exchange is in possession of person C. Now C was having a liability to pay an amount to person D, and he endorsed the instrument to person D over here. Now C would be becoming the endorser, and D would be becoming the endorsee. Now try to understand the point. Now C was having the possession of the instrument, and he was entitled to receive the payment also. C was basically having the possession of the instrument previously, but now the possession of the instrument lies with person D over here. Now person D ultimately is having the possession of the instrument, and he is entitled to receive the payment. There was a legal consideration also. It was not for illegal purposes, so there was a legal consideration also, and he is also having the possession of the instrument. Now the person who is having the possession of the instrument, and further who has held the instrument for the legal consideration, that particular person is said to be holder in due course. Are you getting my point? And further, now C was also entitled to receive the payment, but he does not have the possession of the instrument, but that does not change the fact that he was entitled to receive the payment. Okay, because ultimate payment has not moved yet, because D has not presented the bill yet, and further he has not received the payment yet, and further it's on behalf of C that he has received the instrument. So D is holder in due course because he is having the possession and there was legal consideration, but C was also entitled to receive the payment, but he has not over here the possession of the instrument. So C is holder over here, and further D is holder in due course. Okay, so holder is whom? The person who is legally entitled to receive the money on due date. He may or may not, he will not be having the possession of the instrument, that is a holder. That is the holder of the instrument. Now what is the holder? Who is the holder in due course? Who is having the physical possession of the instrument, and further who is also held the instrument for the legal consideration. Okay, so he is legally entitled to receive the payment, and further he is also having the possession of the instrument, that is holder in due course. Are you getting my point? Okay, so that is regarding it. So that was regarding holder and holder in due course. Okay, so what are the conditions for holder in due course? That he obtained the instrument for valuable considerations, that there was some valuable consideration for he has received the instrument, and further he became holder of the instrument before its maturity. It is also very, very important. It is also very, very important. Why it is important? Why it is important? It should not be the case that the instrument has matured, and further he received the instrument. In that case, he will not be basically the holder in due course, because that instrument is a stale instrument. As we know, the checks are having the validity of 3 months. The checks are valid for 3 months from the date mentioned on the check itself. So if a check is drawn on 15th, if a check is having maturity on 15th on June or 15th of June, if a check is having maturity on 15th of June, and further the person A become the holder in due course on 16th of June, in that case he will not be entitled. He is basically not entitled to receive the payment, because the instrument is a stale instrument. In that particular case. Are you getting my point? So instrument matured, that the instrument expired on 15th of June, and further he has received the instrument on 16th of June. Now how he would be holder in due course? Because the instrument is stale instrument, and further he had no cause to believe that any fact existed in the title of the person from he derived his title. It means if person B has received the instrument from person C, he should not be having any of the facts. He should be having no cause to believe that the title of the C was defective. If B knows the fact, that instrument received by person C from person A is not legitimate, but still he has received the instrument and presented it, he would also not be the holder in due course in that case. If person B knows the fact that this instrument is stolen, and further the endorsement is posed, and further the instrument has been given to him, in that case he would not be the holder in due course, whether he is basically fulfilling all the necessities to become the holder in due course. So those are some of the conditions. Now it is regarding bill sent to bank for collection. What does it mean? The bill is sent to bank for collection for the amount on the behalf of the holder of the bill. It may also be the case that you are going to discount the bill. Now what is basically discounting of the bill? Now you basically have sold the goods to person A over here, and further you drawn a bill is accepted and further given back to you. The bill will become due after, let us say, after period of 3 months. The bill will become due after 3 months, means you will be receiving the payment after a period of 3 months plus grace period, as you know. Okay, and further you require liquidity. Okay, now you will be doing what? You will be basically discounting this particular bill. You will be going to your bank and ask them to discount the bill. Now what is discounting? If the bill was discounting amounting rupees 10 lakh, amounting rupees 10 lakh, and further it is to be discounted, in that particular case, basically the bill would be endorsed by XYZ2 bank over here, and bank would be providing the liquidity to XYZ firm over here. So bank would be endorsed with this particular bill, and bank would be becoming holder in due course. Now bank is becoming the holder in due course, that the bank is entitled to receive the payment, and bank would be crediting the XYZ's account with the amount, but not with the full amount. The bank would be discounting the bill. It means bank would be deducting their charges. The charges may be in the form of interest or some other charges. Okay, so those charges would be deducted. Let us assume, as we assume the bill was amounting to rupees 10 lakh, let us say the 9.80 lakhs were credited to the account of XYZ. 9.80 lakhs were credited to the account of XYZ, and further on due date, that after the maturity, bank would be presenting this bill to A. Bank would be presenting this bill to person A over here for the payment, and A would be making the payment to bank in that particular case, because bank is now holder in due course. Bank is now holder in due course. Okay, are you getting my point? So that is regarding the bill sent to bank for collection. Bill sent to bank for collection. Okay, then it is regarding that when the bill is discounted, then in that particular case the bank would be receiving the payment. The bank would be receiving the payment on behalf of the holder. Okay, then it is regarding the honoring of the bill. Now when the bill is honored, when the payment is made by the drawee. Now A was the drawee on whom the bill was drawn, and he has accepted the bill. The bill on the due date was presented to him, and further if he has paid the bill on due date, on presentation of the bill, in that case the bill is said to be honored. And if it is not paid, that the drawee refuses to make the payment on the due date, then the bill is said to be dishonored. Are you getting my point? After that, it is discounting of a bill. It is regarding the discounting of the bill. So before the due date of the bill, as I have already explained that particular concept to you, so that must be clear to you. So we will not be doing that concept again and again. Then it is an endorsement of bill. Regarding the endorsement of bill, I already told you, when the bill is transferred to some other person by the holder. Now the holder in due course transfers the bill to some other person. In that case, that the bill would be endorsed. The bill is said to be endorsed. Then what is the retirement of bill? What is retirement of bill? When the drawee pays the amount, when the drawee pays the bill before its due date, it is called retirement of bill. Then it is basically regarding the renewal of bill. Now let us understand this concept. What is this particular concept says? Let us say XYZ sold the goods to A, bill was drawn, accepted by A, that is the drawee, and further given back to person XYZ over here. Now XYZ on the due date presented the bill. That particular bill, and further A was not in condition to pay the amount. And the drawee over here requested the XYZ so as to postpone the bill due date for some particular period. And further a credit extension of 1 month or 2 months or whatever period is given to a person A over here. In that case, it is said to be renewal. Of bill. So when a drawee is unable to meet the bill due date, he requests the drawer to accept a part of the bill of payment. It may be the case that he has made the partial payment, or it may be the case that he says that he will be paying the rest of the payment or the full payment after a particular period, and a fresh bill is basically accepted by him. Then in that case, it is said to be the renewal of bill. After that, it is regarding the notary public. Now notary public is what? Notary public is basically an officer appointed by the government. So whenever a bill of exchange is dishonored, the fact is to be noted. And when that particular fact is noted in the register by the notary public is an officer who is appointed by the government itself, and further he is having the powers so as to function the powers relating to the protesting of the negotiable instrument, okay, after the dishonorment. Okay, now if the bill is dishonored, that particular fact is to be noted in the government registers itself. So that would be doing what? That would be basically regarding the noting. When we basically record the fact in the government register with the notary public itself that the bill is dishonored, then it is said to be noting. And further, when it is certified, when the same particular fact is certified that the bill of exchange was dishonored and a certificate is issued regarding it, then it is said to be the protest. So it is said over here, when a bill of exchange or promissory note has been dishonored for non-acceptance of or non-payment, the holder may within a reasonable period cause such dishonor to be noted. After the bill of exchange or promissory note is basically dishonor, the same fact is to be noted down by the notary public in some reasonable period, and when it is done and it is certified by the notary public, it is said to be the certificate such issued is said to be the protest. Okay. So when it is simply noted down in the register, it is said noting, and when a particular certificate is issued in that particular regard, that is said to be the protest. Okay. So that is regarding it. Further, it is regarding the noting charges. So whatever amount you are paying to the notary public for noting down the fact, for recording the fact of the dishonor, it is said to be the noting charges. And what is rebate? What is rebate? It may be the case, as I already told you, that the drawee has paid the amount before the due date. The bill was due after 2 months, but the bill was retired before the due date. In that case, he or she may be given some allowance. Okay, let me explain to you with an example, because these concepts are very important if you want to get to learn about the journal entries of the bill of exchange. Now, as we know, the bill of exchange was drawn by XYZ and was given to A and further accepted and given back to XYZ over here. The amount was to be paid back after 2 months. Okay, so usance period is 2 months in that particular case. And further, made the payment to XYZ after 1 month. A made the payment to XYZ after 1 month. And further, let us say discount of 100 rupees was given to him. So the total payment of 10,000 was to be made. So discount of 100 rupees is given to XYZ. Now he will be paying 9,900. Now that particular discount which is given, or that particular rebate, we will not saying it discount, actually it is basically rebate which is given because the payment has been made before the credit period. So it's a rebate. It's a rebate which is given. So that particular rebate which is given, it is basically an expense for XYZ. So it is basically an expense for XYZ. Okay, so it is a nominal account. It's an expense. It's a nominal account. Are you getting my point? Okay. Now let us have a look at the accommodation bill. Now what is accommodation bill? Accommodation bill basically kite flying. When there is no debtor-creditor relationship between the parties concerned, it is basically kite flying. Why it is said to be kite flying? Because there is no base point in between. So XYZ has not sold any of the goods to A. XYZ has not sold any of the goods to A, but XYZ has drawn a bill on the name of A so as to pay amount after a particular period. Let us say he has drawn a bill. There is no consideration. There is no transaction between XYZ and A. There is no debtor-creditor relation between the parties XYZ over here and A over here. Okay, but a bill has been drawn by XYZ on A so as to pay a sum of amount rupees 10 lakh after a period of 3 months. Now this particular bill was drawn on A and further accepted and given back to XYZ over here. Okay, now there is no debtor-creditor relationship between them because there is no legal consideration between them. Now this particular bill was drawn and further XYZ went to its bank. For discounting. Now bank can basically discount that particular bill. Let us say that discounted that particular bill for 9.80 lakhs. 20 lakh rupees, 20,000 were deducted as per their fees, and further on due date after 3 months the bill would be presented to A. For payment. So in that particular case, there was no consideration between XYZ and A, but still a bill is drawn and further it was discounted. Now XYZ is having a liquidity of 9.80 lakh. XYZ has received an advance. It may be the case that XYZ and A may be dividing this particular money as per their agreement or as per their promise in between, but it is not known to the bank itself. So bank would be basically presenting the bill after the due date and further A would be having the liability so as to pay the amount to the bank over here. Okay, so that is the case of the accommodation bill. Bills. Further, it is regarding the bill books. As I already told you, it's a bill receivable book and bills payable book. So when a bill is drawn and accepted by the drawee, it is basically you are entitled to receive the payment. So the entry is to be recorded in the bill receivables. Entry is to be recorded on the bills receivables. So bills receivable is basically account is debited. In that particular case, the bill receivable account is debited, and for the debtor account is credited. What is the simple case? Let me tell you with an example. So what it says, likewise, as we will be taking the same case that XYZ has sold the goods to A over here, amounting rupees 10,000. Amounting rupees 10,000 goods have been sold. Now in that particular case, if it's a credit sale, what would be the journal entry? What would be the journal entry? What would be the journal entry if it's a credit sale? It would be basically A's account would be debited or credited. A's account would be debited or credited. So first of all, it's a sale. We know it's a sale. It's a credit sale. Now in that particular case, if you have made a sale, you are basically entitled for income. You are basically entitled to income. So it's an income for you. It's an income for you if you have made the sales. So in that particular case, sales account would be credited. Sales account would be credited, and further A's account would be debited. A's account would be debited because he has received the credit from you. So credit the receiver, debit the giver. Credit the receiver, debit the giver. Okay, so that is the golden rule for the personal account, because A's account is a personal account over here. So now what would be the case? What would be the journal entry? What would be the journal entry? So A's account is to be debited. A's account debited with the 10,000, and further to sales account credited with 10,000. That would be the journal entry. That would be the journal entry because it was a credit sale. And further a bill was drawn. And further it is accepted by the person A. It is accepted by the person A. Now in that case, what would be the journal entry? Now basically over here, bills receivable is what? Bills receivable is an asset. As I already told you, it's an asset for you. It's an asset for you because you are entitled to receive the amount. Because you are entitled to receive the amount over here, and further now it is accepted. Now it's accepted and it became an asset for you. Okay, now the journal entry that would be passed, that would be bills receivable account would be credited, because for XYZ books it would be the entry, because for XYZ it's bills receivable. Once the amount has been once the bill has been drawn and accepted by the drawee, it would be becoming an asset for the XYZ. It would be becoming an asset for the XYZ. And for bills receivable account would be bills receivables account here in that particular case would be debited. It would be debited with the same amount, 10,000, and further the creditor amount would be credited, because A is now no longer your debtor. Basically he is now it's now your asset. So we will be crediting the account of A to A's account. It would be credited with 10,000. Are you getting my point? So that would be the journal entry. in that particular case. Are you getting my point? Kindly please let me know if you are basically getting my point or not. So it was regarding the journal entry. Okay, now what is bills payable book? Now in the same example, if we look at the journal entries on the debtor side, if we look into the journal entries of the debtor side, now when a bill is drawn and accepted, by the debtor over here to whom the goods were sold on credit, in that particular case it would be a liability. On A. It's an asset for XYZ, but a liability for A, because he is now obligated to pay the amount. When the transaction was there, when the goods were sold, then the journal entry that would be passed in the books of A. We are talking about the books of A in that particular case. In that case, it would be a credit purchase. Now purchase account is what? Purchase account is an expense account, so it is to be debited. So purchases account So purchases account is to be debited with 10,000, and further to XYZ's account. To XYZ's account, it is to be credited with the same amount, because XYZ is now over here, because XYZ over here is now creditor to A, so that would be the entry. And when the bill is accepted by person over here, that would be becoming a liability for him, that would be becoming a liability for person A. We are talking about A's book over here, kindly please concentrate on that particular point. Okay, so XYZ journal books, journal entries we have already learned. Now we are learning about A's books. Okay, so it would be becoming a liability. In that particular case, what particular journal would be included? It would be bills payable. It would be bills payable account. Now in that particular case, now the amount is to be paid to whom? The amount is to be paid to the amount is basically accepted to be paid. The amount is basically accepted to be paid. Now further, what would be done in that particular case? Which particular account would be debited? Which particular account would be debited? Kindly please let me know. Over here, bills payable account is a liability. Bills payable account is a liability. Okay, so liabilities are in credit balance. Liabilities are having the credit balance. Liabilities are having what balance? Liabilities are having credit balance. Okay, now basically over here, the bills, the XYZ account is to be debited. XYZ's account is to be debited. So XYZ account would be debited with the same amount of 10,000, and further the entry would be recorded in bills payable account. Bills payable account. So bills payable account would be credited. Okay, so those would be the journal entry. Those would be passed in this particular case. Okay. So that was regarding it. Now let us have a look at the journal entries. Now let us have a look at the journal entries of these. So when goods are sold, I already told you, when the goods are sold, in that case buyer's account is to be debited. When you are selling the goods, basically that is a particular scenario when XYZ is particularly selling the goods to A over here. Now A is the debtor and XYZ is the creditor. XYZ is the creditor. Now in this particular case, debit the receiver, credit the giver. Debit the receiver, credit the giver. So A is a receiver, A's account would be debited as per the golden rule, and further sales would be credited because it's an income. Now second case, it says when bills are made and accepted by the DROI. Now bill has been drawn and is accepted by the DROI. Okay, now in that particular case, bills receivable account is debited because it's becoming an asset, so it would be debited, and DROI's account is to be credited. That is, A's account will be credited. These two journal entries we have already learned. Third case, it says when payment is received in cash or bank on due date. Let us say on due date the bill was presented, or on and the further payment was made. That is, the bill is honored. It is said that on due date the bill amount is paid. It is said to be honored. The bill is said to be honored. Now let us consider the same case. Okay, in that case, you will be receiving the money either in cash or in bank account. You will be receiving the money either in cash or bank account. So in that case, basically cash account and bank account both are asset accounts, and further debit what comes in, credit what goes out. So you are receiving the money, so it would be debited. So cash account or bank account would be debited and bill receivable account would be credited. So it's an unfavorable entry over here in the case of the bills receivable account, because we want to reduce the amount now. So bills receivable account would be credited. Okay, so that would be the journal entry regarding it. Now it is a case when a rebate is if the bill is discounted with bank. Now it is the case when the bill is discounted with the bank. Now the same scenario is over, that the bill is accepted by at A over here and further given back to XYZ, but XYZ wants the liquidity, so XYZ went to the bank over here. Now the bill was amounting rupees 10,000 and further bank discounted it for rupees 9,500. Now particularly if we look at the particular case over here, XYZ was entitled to receive rupees 10,000. He was entitled to receive rupees 10,000, but he has received 9,500. Now this 9,500 amount is received in his account. So this is basically bank account. So bank account would be debited because bank account is an asset account, and further asset account is to be debited when you have received the money. So 9,500 would be over here. So it would be debited. So that is why bank account is debited. Now if you look at the discount, now the bank has discounted the bill for 9,500. The discounted amount is rupees 500. The discounted amount is rupees 500. Now this particular amount is expense for XYZ. Now this particular amount of 500 is an expense for XYZ. So it's a nominal account. So it would be debited. So the discount account is to be debited also. And further, the bills receivable is now nullified. So if we are to nullify that particular entry, and further we will be crediting that particular account, okay, with the same amount of rupees 10,000. So in that particular case, the bank account would be is credited with the 9,500 because you have received the amount, so it will be debited in your books. And further, bill there is a discount. The bank has basically discounted the bill for 500, so that's discount is basically an expense for you. The discount is basically an expense for you, so it would be debited also, so it would be 500. And further, the two bills receivable account, it would be credited with 10,000. So that would be the case. Okay, are you getting my point? After that, it is regarding if bill is endorsed to some other party. If the bill was endorsed to some other party, so let us assume the same case. As I told you, XYZ sold the goods to A, bill was drawn, accepted by XYZ, and further he is entitled to receive the payment. Now XYZ was having a liability to pay the amount to person C, so he endorsed the bill to C. So he endorsed the bill to C over here. Now we know already that in case when the bill was drawn and accepted, what would be the journal entry? What would be the journal entry? The journal entry would be that bills receivable account is to be debited. The bills receivable account is to be debited, and further A's account would be credited. A's account would be credited. So that is the case. That is the case when the bill was drawn and accepted by A. When the bill was drawn and accepted by A. Now you have endorsed the bill to person C. You have endorsed the bill to person C. It means you will be having a liability to pay the amount to C. That is why you have endorsed the bill to C, na? Because you were to previously make a payment to person C over here with the same amount. That is why you endorsed the bill to him. So if you were having the liability, what would be the journal entry for that? If you were having the liability to pay an amount of rupees 10,000 to person C over here, what would be the journal entry? In that case particularly, if you were to make the payment to person C, C was your creditor and you were basically entitled to pay the amount to person C. So C's account would be in credit balance. So C's account would be in the credit balance. Let us assume that you previously you purchased a raw material amounting rupees 10,000 from C. So that is the case. So in your books, so in XYZ books, how it would be recorded? The entry would be recorded as the purchases account. So purchases account is an expense, so it will be credited. So purchases account, when the goods are purchased from C, in that case purchases, that is why I am basically making you understand that particular fact, that why C was creditor. That why particular C was creditor over here to XYZ. That is why we are learning about this entry. So purchases account was to be credited, to be debited, and further to C's account, because it's a credit purchase, so its account would be credited. So its account would be credited because debit the receiver, credit the giver. Credit the giver. Now C is giver over here because he has sold the goods to you on credit. So it's a C is giver over here, so its account would be credited. So its account would be credited. That is a particular case. Now you are endorsing the bill to C. You are endorsing the bill to C. What does it mean? It means your receivable account is to be reduced. Your receivable account is to be reduced because you are nullifying both the entries. You were to receive rupees 10,000. You are to pay rupees 10,000. So you are nullifying both those heads. You are nullifying both those heads. So in this particular case, you are entitled to receive the amount. That is why bill receivable account is debited. But in this particular case, you are basically having the liability to pay the amount. That is why C's account shows a credit balance over here. Now you are nullifying these two accounts because you have endorsed that particular bill to C. Now what would be the journal entry? C's account is to be debited and bill receivable account will be credited. So we are nullifying the bill receivable account with the C's account. Okay, are you getting my point? Because the credit balance in personal account shows that you are having liability toward that person. You are having liability toward that person, and debit balance in the bills receivable account shows that you are having an asset. You are entitled to receive the bill receivables. You are entitled to receive the bills receivables. So that was the particular scenario. Okay, so that was regarding it. Next entry says, if buyer retires the bill before the due date at a discount, it may be a rebate may be given. It may be the case that you have sold the goods to person A, bill was amounting rupees 10,000 as we have learned previously also, and A for there the bill was accepted and given back to XYZ. Over here the amount was to be paid after 2 months, and further A made the payment after 1 month. A paid the payment after 1 month, and XYZ has given a rebate of rupees 100. So that particular rebate which is given to him, that particular rebate that is given to person A over here on behalf of XYZ so as to pay the amount before 2 months, that is basically an expense. So rebate is what? Rebate is an expense. So whatever rebate you are giving, whatever discount you are giving to the amount, that's an expense for you. That is why now you have received 9,900. Now you received 9,900 because you gave discount of rupees 100. So that's an asset. That's an asset for you, because you have received the amount. So bank account is an asset account. So debit what comes in, that is why we are debiting bank account over here. And further rebate account is to be debited because it's an expense for you. So it will be debited because all the expenses and losses are to be debited because it's a nominal account. And further bills receivable account will be credited with the same balance of the total, that is 10,000, because it's becoming an asset for you. Bills receivable reduced, not asset. Basically your asset amount reduced so as you were to post the non-favorable entry. So it will be credited with 10,000, not debited, it will be credited. So bill receivable was previously your asset, you were entitled to receive the 10,000. Now you have received the amount now. Okay, accordingly you have to nullify that entry. So it would be an non-favorable entry that will be posted over here, recorded over here. So it is 10,000. It will be recorded as credit side on the credit side of the bill receivables. Okay. After that it says, when the bill is dishonored, very important, very important. Why important? Now the same scenario goes on, that XYZ draws a bill to A, accepted by A, and further it was to be paid after 2 months. Now XYZ presented the bill after 2 months. On the due date the bill was presented, and further A was unable to pay the amount. A was unable to pay the amount. So in that case, what would be the journal entry? Now the bills receivable is basically not there because you have not received the amount, and you are entitled again, because the bills receivable account is basically not existing there because you were entitled to receive the payment after 2 months. You have not received it yet, so you are to nullify that entry. You have to nullify that entry in bill receivable account. So that bill receivable account was previously debited with the 10,000. If you remember the entry when it was accepted, when the bill was drawn and accepted by A, in that particular case the journal entry was that we debited the bill receivable account. We debited the bill receivable account with the 10,000, and further we credited the A's account. So A's account was credited because now A was not to make the payment because he has accepted the bill. He is to make the payment, but in our books we need to record that fact that bill are to be received, that the bill amount is to be received. So you basically credited that particular amount and nullified the A's account with 10,000, and nullified that A's account with 10,000 because you credited the A's account. Okay, after that basically now the bill is dishonored. Now again bill receivable, that was your asset, that is to be reduced. Because now it is not your receivable. You are entitled to receive the payment from A now. You are entitled to receive the payment again from A now. So that entry is to be reversed. That particular entry is to be reversed. That is why it is over here that A's account would be debited again and bill receivable account would be credited. Bill receivable account is to be credited. Okay, that is the case. And further, when the bill is dishonored and discounted with bank, when the bill is dishonored and discounted with bank. Now we already learned the fact that the bill may be discounted with the bank. The bill may be discounted with the bank. What does it mean? What does it mean? It means when we said that XYZ has made a sale, A has accepted the drawn bill was drawn and accepted by XYZ, and further XYZ went to the bank and further discounted the bill, and 9900 was given and 100 rupees discount was there. 100 rupees discount was there. What was journal entry in that case? What was journal entry in that case? Because you have received the amount in your bank account, so bank account is basically your real account, and further it is to be debited. So bank account was debited, and further there was a discount of rupees 100, so that's an expense for you. So discount account was also debited, so it was 9900 you received, 100 rupees was discount. Let us say 100 rupees bank deducted as their interest and other charges, and further you credited the bills receivable account. Further you credited the bills receivable account, because now you are not entitled to receive the bills, you are not entitled to receive the amount. Now bank is entitled to receive the amount. The bank become the holder in due course. That we already learnt. This concept we already learnt, okay, because the bill was endorsed by XYZ to the bank over here. Okay, so the bills receivable account was credited was 10,000. That was the case. But now on due date, bank presented the bill to A and the bill was dishonored. Now in that particular case, you are again having the liability to pay the amount of rupees 10,000 to bank, because the bill was dishonored. Now you are having the liability. To pay the amount to bank again. Okay. Now in that case particularly, buyer account is to be debited, because you are again entitled to receive the payment from person A. If the bill is dishonored, it is not the case that you are not entitled to receive the case. It is only the fact that the bill is dishonored, and further you are to make loss good to the bank, that you are to pay back the amount of rupees 10,000 that you have received from the bank. Okay, so you will be crediting your bank account again. So that will be the entry that will be posted, that A's account is to be debited, because again you are entitled to receive rupees 10,000 from the person A over here, and further bank account is to be credited, because rupees 9900 you received, you have to pay rupees 10,000. Because rupees 100, those were not given to you, those were basically the charges which were deducted by bank, because you have to pay rupees 10,000 again to the bank, so bank account will be credited. Okay, so that is the case. That would be the second entry. Are you able to get it? So if you have the concepts, you must have learnt it. Then it is regarding when the bill is dishonored and endorsed to C. When the bill is dishonored and endorsed to C, what does it mean? Now in previous case, we endorsed the bill to bank, that is why we basically credited the bank account. Now in this particular case, we endorsed the bill to C and it was dishonored. Now we will be crediting the C's account. Rest all is same. Okay. Next entry, it says bill sent for collection. Now when you have sent the bill simply for collection, you have not discounted the bill, but you have sent the bill for collection. What would be the case? Let us assume the same case, that XYZ has sold the goods to A, bill is drawn and accepted by A and further given back to A over here, and further bill was amounting rupees 10,000. And further you deposited this bill, with your bank so as to collect the bill, so as to collect the bank receivables. Let us say bank will be basically collecting this bill on your behalf. Okay, now you have sent the bills for collection. In that particular case, bills sent for collection account is to be debited. And now bills receivable account is to be credited. Okay, so that would be the journal entry in that regard. So bill for collection account is to be debited and bills receivable account is to be credited. And last entry, that when bill sent for collection are realized. So when you have once this particular entry, and further you have received the amount, in that particular case we will be nullifying this particular account balance. We'll be nullifying this particular account balance, so we'll be crediting that particular account, and you have received the balance in your bank account, so it will be debited. Okay, so that is a particular case. Okay, the next chapter we are going to cover over here, that's related to operational aspects of the accounting entries, and it's quite a simple chapter and a very small chapter over here. There is only a few concepts that you need to understand. Okay, so operational aspects of the accounting entry. What is the operational aspect of accounting entries? When we are considering that we'll be recording the entries into the journal, posting them to the ledgers, further the trial balance will be prepared, then we are going to prepare the final accounts. Final accounts is related to trading account, profit and loss account, and further balance sheet. These will be prepared. So that is a main aspect. That is the main aspect. Now the ultimate objective of recording the entry financial transaction is related to what? That we want to prepare the balance sheet, we want to prepare the profit and loss account, so that all the stakeholders mean what? Who are the investors, who are the creditors, who are the internal employees, management over there, all the stakeholders will be having a fair and transparent picture related to that what is going on, that is what is going on in the enterprise over there. So we want to know about the financial position of the company in that particular accounting period over there. So we are basically concerned about these all. But what is the basis of all the transactions which are being recorded into the journal over there? So we have to look at the types of transaction first of all. So there are two types of transaction. One, it is the cash transactions, and the other one, it's related to the non-cash transactions. It is related to the non-cash transactions over there. Now for recording the transactions, you must be having, because all of us are being bankers over there. We know there are vouchers. Now vouchers are basically of three types: debit voucher, credit voucher, and composite voucher. Okay, so these are the type of vouchers. So vouchers are actually related to what? These act as a proof of statement for accounting transactions. Now whatsoever the accounting transactions are being performed by the bankers in the bank over there, now they are working on with some proof over there. So voucher is a proof for the same. Voucher is a proof for those accounting transactions over there. So we are having types of vouchers over there, like debit voucher, credit voucher, and composite voucher over there. Okay, so first of all, it's related to the debit voucher. Debit voucher is related to what? It's related to payment voucher over there. Now you want to basically get a payment from your account, then you can use the debit voucher. Or basically where these are used, like the check is issued to the customers, check is paid, check paid, or issues or pay orders are issued by the bank over there. If there is withdrawal form, and simply if the draft is issued by other branches of the bank payable at the branch over there, in that case also the debit voucher will be used. Draft issued by the banks on the branch in terms and of an approved agreement between the two banks over there. Traveler check when it is issued, or draft pay orders issued by the branch itself. So in these all cases, the debit voucher is used. You can just take a look at the notes over there, because it's not that important from the exam point of view. We simply all are having the idea related to same, that where the debit voucher is used, where the credit voucher is used, and the next one, it's related to credit voucher. Now credit voucher is used to take a record payment received by the bank. Now whatsoever the payment bank will be receiving, so it's related to the record for the same. Okay, so it may also encompass related to paying slips. Now if you want to deposit the amount to your account over there, in that particular case there is a paying slip that you are going to deposit with the bank along with the deposit. So that's actually a proof that you have received the payment. Okay, so you have received the payment. And also application for issued of term deposit, like term deposit is issued. In that particular case, it up to a certain limit, let's say up to 20,000 rupees, it is allowed that you can open the FDR in cash. So that is allowed over there. And also you have to you have to use instruments like demand draft or RTGS or NEFT, etc. In that particular case, in some cases you can deposit the amount in cash over there. And also when the challans are to be requested, like you wanted to apply for an exam and you went to the bank over there, and for that particular purpose you did what? You deposited the amount of the cash counter directly. So that's actually related to what? That you are using the credit voucher over there. Okay, then that is a composite voucher. Composite voucher is related to on the same voucher you're having that both debit and credit accounts. Okay, so like when we have to transfer the account, transfer the balances from one account to another account over there, we will be using the composite voucher. We'll be using the composite voucher over there. So this is actually related to non-financial thing. This is actually related to non-financial things over there. This is not related to that direct financial outlay is not there. Okay, so most of the transactions which are covered by the composite vouchers pertain to the internal accounts of the bank over there, like non-customer accounts over there directly. Okay, so in general, just
I told you that it's related to that the internal accounts are there, but also it can be related to the two different accounts of the same person, or the different persons can be there. Okay, so that's actually related to it. And further, what are the features of the accounting system, slip system over there? Not a slip system. Why these are all prepared over there? First of all, you will be having vouchers with you, whether it is related to the cash voucher, debit voucher, credit voucher, or the composite voucher. And based on those vouchers, you will be having the entries into the system over there. Like you will be having the entries into the personal ledger of the account holders over there directly from the vouchers over there. And further, now you will be preparing the daily summary sheet. Now, daily summary sheet is actually related to a sheet over there on which the data related to which accounts have been affected will be given over there, and the totals will be prepared. That what was the total debit deposited, what was the total credit deposited over there, and after that the general ledger trial balance is extracted each and every day. Okay, so that is to be extracted, and that is to be agreed. Now let's say in a computerized environment, this all function is performed by the computer itself, so you need not to worry about it. So if there is correct credit and debit has been posted by you, so the general ledger balances will actually be tallying over there. So okay, so that is to be tallied and agreed over there, and all the entries in the personal ledgers and the summary sheets are checked by the person. Now the summary sheet which are prepared, and on the daily to daily basis, the summary sheet will be checked and prepared by the different persons, so that if there is any discrepancy or there is any mistake in the summary sheet itself, that can be detected and further can be helped with. Okay, so that's actually related to the features of accounting system. Okay, so that will be related to the operational aspects of the accounting system over here. I hope that you must have understood the concepts related to the same.